All right, so you've been asking about how to position your portfolio
Yeah.
in this post-election world.
Hmm.
We've got a breakdown of 10 strong stock picks
Okay.
that could thrive
Interesting.
in this new landscape.
That's right. And while no investment is a sure thing,
Right.
understanding how economic forces and political decisions are interacting is absolutely key right now.
Exactly.
Yeah.
We're talking about companies from all sorts of sectors,
Mm-hmm.
which is great for diversification.
Exactly.
But let's start with those aiming for resilience
Okay.
in these uncertain times.
Mm-hmm.
First up,
Sure.
Apple and Microsoft,
The Titans.
the titans of tech.
Yeah,
They seem like the kind of companies that can weather any storm.
I think so.
But what makes them particularly strong in this specific climate?
Well, you're right. They both have that safe bet appeal.
Yeah.
Apple, for example, enjoys intense brand loyalty
Right.
and boasts a wide range of products and services, from phones to streaming. They also have this incredible cash cushion,
Wow.
which gives them flexibility that a lot of companies just don't have.
Right. I can see why that would be reassuring to investors right now.
Mm-hmm.
It's like they have a safety net built in.
Absolutely.
And what about those recurring revenue streams?
Yeah.
From things like the App Store and iCloud?
That's right.
That seems like a big deal too,
It is.
especially in uncertain
It
times.
absolutely is. Steady, predictable income is like gold to investors.
Yeah.
Especially when the economic waters are choppy.
Right.
Now, Microsoft is another fascinating case.
Okay.
Their dominance in cloud computing with Azure is already huge.
Huge.
And then you factor in their expanding work solutions.
Like what?
Think Teams Office 365 and all the ways we work in the digital age.
Okay.
It's no wonder they're considered a strong pick.
So they're basically providing the tools we all need to function,
Exactly.
no matter what's happening in the world.
Yeah.
Very smart. Okay, so we've got these giants, Apple and Microsoft, laying the foundation of the digital age.
Right.
But there's another tech company on this list that's doing something totally different.
Okay.
NVIDIA.
Oh, yeah.
They're all about those powerful GPUs we keep hearing about.
That's right.
Where do they fit into this post-election landscape?
NVIDIA is interesting because they're riding a few massive waves at the same time.
What?
Their GPUs are essential for everything from gaming to artificial intelligence to powering those massive data centers that run the internet.
Wow.
So even if some sectors take a hit, the demand for their technology is likely to keep growing.
I see. So they're kind of betting on the future being even more digital no matter what.
It's a good way to put it.
That's a pretty bold move.
Yeah.
But it's not just about bits and bytes, right?
Right.
There's this whole green wave sweeping through the markets too.
Uh-huh.
And that brings us to Tesla and NextEra Energy.
Okay.
Let's start with Tesla, the electric vehicle innovator.
What?
What's the thinking behind picking them in this post-election world?
Well, the current administration has been very vocal about their commitment to sustainability.
Right.
And that's good news for companies like Tesla.
Okay.
They're undeniably the leader in electric vehicles.
Yeah.
And they're pushing hard into renewable energy with solar panels and battery technology.
Wow.
If government policies continue to favor green initiatives, Tesla could see some serious benefits.
So Tesla is banking on the government putting its money where its mouth is when it comes to clean energy.
Yeah, I think that's a fair assessment.
But I remember reading that Tesla's stock can be pretty volatile.
Uh-huh.
Is that something investors need to be wary of?
It's definitely a factor.
Okay.
Tesla is a high-growth, high-risk company.
Interesting.
Their valuation is already sky high, so any hiccups along the way could send their stock tumbling.
Right.
Now, if you're looking for a slightly more stable play on the green wave,
Okay.
that's where NextEra Energy comes in.
NextEra Energy. They're a bit more under the radar. What's their story?
They're a giant in clean energy production,
Oh.
focusing on wind and solar farms.
Mm-hmm.
With all the talk about post-election infrastructure spending,
Right.
NextEra is well positioned to benefit.
I see.
Think of them as the steady, reliable provider,
So,
in contrast to Tesla's flashy innovator persona.
interesting contrast.
Yeah,
Two different approaches to the same megatrend.
exactly.
So we've covered some big players in tech and green energy.
Right.
But what about good old-fashioned finance?
Okay.
JPMorgan Chase made the list.
Interesting.
And that's not exactly a company known for being on the cutting edge of disruption.
True.
What makes them a good pick right now?
JPMorgan Chase is like the bedrock of the financial sector.
Oh, okay.
Their vast range of services and robust financial structure make them extremely resilient, particularly in the current environment where interest rates are expected to rise.
Why do banks tend to do well when interest rates go up?
That's a good question.
I've heard that before, but I've never understood the reason behind it.
It's because higher interest rates mean banks can earn more from loans and other credit services.
Okay.
Think of it as a wider profit margin on their core business.
Got it.
But of course, we have to acknowledge that no investment is completely immune to broader economic slowdowns.
That's a good point.
It's
It's like a
just-
balancing act,
Yeah,
weighing financial rewards against inherent risks.
exactly.
And that's a good reminder for you listening. Consider your own risk tolerance when evaluating any of these picks.
Right.
Investing isn't one size fits all.
Absolutely. And speaking of sectors that tend to be relatively stable even during uncertain times,
Okay.
we have healthcare represented here by UnitedHealth Group.
Right. Because people still need health care, regardless of what the stock market is doing.
That's true.
So what makes UnitedHealth stand out in the post-election landscape?
What's interesting about them is that they're embracing the future of healthcare. They're deeply involved in telemedicine and are investing heavily in healthcare technology,
Oh, wow.
which positions them well for future growth.
I see.
You also have those underlying long-term trends like the aging population and rising healthcare costs
Right.
that contribute to the sector's resilience.
So they're a solid bet with some potential for exciting growth.
Exactly.
Makes sense. Okay, we've covered tech, green energy, finance, and healthcare. And now we're back to tech with Alphabet,
Google.
Google's parent company.
Right.
What's the thinking behind picking them?
Alphabet is a fascinating case because they hold this incredible power through digital advertising,
Yeah.
but that also makes them vulnerable to economic shifts.
Oh, how so?
When budgets tighten, advertising is often one of the first things to get cut.
Right, that makes sense.
Yeah.
But you mentioned earlier that they're diversifying beyond advertising, right?
Yes.
What are they doing to make themselves a bit more resilient?
They're making big moves. Google Cloud is a major growth area for them. And they're also investing heavily in artificial intelligence and self-driving technology through Waymo.
So they're trying to build a more diverse portfolio, similar to what Apple and Microsoft are doing. So they're
Yeah.
not just sitting back and hoping for the best.
Right.
They're actively working to navigate these potentially choppy waters.
Yeah.
That's reassuring. Okay, we've covered a lot of familiar names, but there's one company on this list that feels a little out of place.
Okay.
Caterpillar.
Interesting.
What's the story there?
Yeah.
I don't usually think of construction equipment as a hot investment.
Caterpillar might seem like an unexpected choice,
It does.
but think about their role in the world.
Okay.
Construction, mining, and agriculture, these are essential industries.
That's true.
And with all the talk about increased infrastructure spending after the election,
Right.
demand for their equipment could surge.
Ah, so they're a play on government spending and policies in a big way.
That's right.
If those big infrastructure projects get rolling, Caterpillar's going to be very busy.
Already busy.
That's a clever connection. All right, so we've got tech giants, green energy innovators, a financial powerhouse, a healthcare leader, and now a company that literally builds the backbone of our physical world. It's quite a mix.
It is.
But we've got one more to go, Pfizer.
Okay.
What makes this pharmaceutical giant a standout in the post-election landscape?
Pfizer's interesting because they have this consistent demand for their products.
Yeah.
They're well known for their role in vaccine development,
Right.
but they have a whole pipeline of medications and treatments,
Okay.
and people need those regardless of the political climate.
Right. Healthcare is one of those things that's always going to be in demand.
I think that's right.
And Pfizer's recent success with vaccine development highlights just how crucial this sector is in our current global context.
For sure.
So we've covered 10 companies spanning various sectors,
Yeah.
all with the potential to thrive in this post-election world. It's a lot to digest. But I have a feeling we're just scratching the surface here.
Yeah, I think so.
What else should our listeners keep in mind as they consider these potential picks?
It's true. We've given a broad overview,
Right.
but there's always more to uncover when
Yeah.
it comes to informed investing.
Of course.
For example, take Microsoft.
Okay.
It's not just about their general cloud dominance.
Right.
What's particularly interesting right now is their focus on government cloud contracts through Azure.
Interesting.
With cybersecurity concerns top of mind for the new administration,
Yeah.
their revenue from those contracts could jump significantly.
So it's about looking beyond the surface and understanding the specific ways these companies are positioned to benefit from the current political landscape.
Exactly.
That's a great point. And I remember you mentioned that Microsoft's PE ratio
Yes,
is looking pretty attractive compared to other tech giants.
it is.
What does that mean for potential investors?
Well, the price-to-earnings ratio, or
Yeah.
PE ratio,
Right.
is a key metric investors use to gauge a company's value.
Okay.
Essentially, it tells you how much you're paying for each dollar of the company's earnings.
I see.
A lower PE ratio can indicate that a stock is undervalued.
Okay.
Now, it's not the only factor to consider,
Right.
but it can be a helpful signal.
Okay, so it's like comparing apples to apples.
Yeah,
Seeing which company offers the most bang for your buck based on their earnings.
exactly.
That makes sense. Now let's shift gears and talk about Tesla for a moment.
All right.
You mentioned that government policies favoring green initiatives could be a big boost for them.
They could.
But what specific policies are we talking about?
Okay.
And how could they impact Tesla's bottom line?
There's a lot of buzz around the new administration's proposed infrastructure bill,
Okay.
which includes significant funding for electric vehicle charging stations and renewable energy projects.
So that would be huge for them.
It could create a huge wave of demand for Tesla's products and services, not to mention the potential impact of extended tax credits for electric vehicle purchases.
So it's not just about the cars themselves. It's about the entire ecosystem that supports electric vehicles.
The whole picture.
That's really interesting. Now, what about Tesla's energy storage business? How does that fit into the post-election picture?
That's another area where government incentives could play a big role.
Okay.
The infrastructure bill includes provisions for promoting energy storage solutions, which are crucial for making renewable energy sources more reliable.
Right.
Tesla's Powerwall batteries and Megapack systems are already leaders in this space.
So Tesla is positioned to benefit from this push towards cleaner and more reliable energy on multiple fronts.
I think so.
It sounds like they're playing a long game here.
They are.
Now, let's talk about NextEra Energy for a moment.
Okay.
They seem to be taking a different approach to clean energy than Tesla.
They are.
What are some of their key strengths in this post-election environment?
NextEra is all about scale and stability. They're the largest producer of wind and solar energy in the United States.
Wow.
They own and operate a massive network of renewable energy facilities,
Okay.
and they have a proven track record of delivering consistent returns to investors. What's interesting in the current context is their focus on regulated utilities.
Regulated utilities. What's the significance of that in a post-election world?
Regulated utilities operate in a more predictable environment.
Okay.
Their rates are set by government agencies,
I see.
which provides a degree of stability
Okay.
that's attractive to investors, especially in times of uncertainty.
Yeah, that makes sense.
NextEra's strong presence in this space gives them a competitive advantage.
Okay.
They also have an impressive dividend yield.
Dividend yield. I know some of our listeners might not be familiar with that term.
Right.
Can you explain what that means and why it's important?
Absolutely. A dividend is a portion of a company's profits
Okay.
that it pays out to its shareholders.
Got it.
The dividend yield is the annual dividend payment expressed as a percentage of the stock price.
Okay.
NextEra has a history of paying solid dividends, which can provide investors with a steady stream of income on top of any potential stock price appreciation.
So it's like a bonus for holding onto the stock.
Yeah,
I can see why that would be appealing.
exactly.
Okay, let's move on to JPMorgan Chase. You mentioned earlier that they tend to benefit from rising interest rates. But how does that actually work? What's the mechanism there?
Well, as interest rates rise, banks can charge higher interest rates on loans.
Okay.
Think mortgages, car loans, business loans.
Okay.
All those interest payments flowing back to the bank.
I see.
It's a pretty straightforward way for them to increase their earnings.
So it's almost like a built-in tailwind for their business
Right.
when interest rates are on the rise.
Yeah,
But it's not all sunshine and roses for banks, right?
sure.
There are always risks to consider.
Of course.
What are some of the potential downsides for JPMorgan Chase in the current environment?
One of the biggest risks for banks is an economic slowdown.
Yeah.
Businesses and consumers start struggling, loan defaults can increase,
Right.
and that can eat into a bank's profits.
Makes sense.
Another factor to consider is regulation.
Okay.
The new administration has hinted at potential changes to financial regulations, which could impact JPMorgan's operations.
Right. So there are always external factors that can influence a company's performance,
There are.
no matter how strong its fundamentals might be.
That's right.
It's a good reminder that investing always involves a degree of uncertainty.
Absolutely.
Speaking of which, let's talk about UnitedHealth Group.
Okay.
They seem like a pretty solid bet in the healthcare sector.
They do.
But what are some of the specific risks or challenges they might face in this post-election world?
One of the biggest challenges for healthcare companies is navigating the complex regulatory landscape.
Okay.
The new administration has expressed a desire to reform healthcare, and that could mean changes to reimbursement rates, drug pricing policies, and other regulations that could impact UnitedHealth's profitability.
So they're kind of at the mercy of the political winds when it comes to how healthcare is structured and regulated.
That's one way to look at it.
That's a tricky position to be in.
Yeah,
But I imagine there are also some exciting opportunities for them in this changing landscape, right?
absolutely. The shift towards value-based care,
Okay.
where providers are rewarded for quality outcomes rather than the volume of services provided,
Yeah.
is creating opportunities for companies like UnitedHealth that are
Yeah.
focused on managing healthcare costs and improving patient outcomes.
So it's not just about providing healthcare.
Right.
It's about providing it in a way that's more efficient and cost-effective.
Exactly.
That's a fascinating trend.
Okay.
Now let's talk about Alphabet, Google's parent company.
Okay.
We discussed earlier how they're vulnerable to economic slowdowns because of their reliance on advertising revenue. But they're also making big investments in areas like cloud computing and artificial intelligence.
Uh-huh.
Are these investments paying off?
Wow.
And how could they contribute to Alphabet's growth in the post-election era?
Their cloud business, Google Cloud, is growing rapidly
Okay.
and is now considered a major competitor to Amazon Web Services and Microsoft Azure.
So they're in the game.
They are.
That's good.
This diversification away from advertising is a positive sign, but it's still early days.
Right.
Their AI investments are more speculative,
Okay.
but they have the potential to be game changers.
So they're kind of hedging their bets,
I think so.
trying to find new avenues for growth while still relying on their core advertising business.
Yeah.
It's a balancing act, for sure. Okay, we talked about Caterpillar earlier and how they could benefit from increased infrastructure spending.
Right.
But I'm curious, what about the risks associated with government spending? Could those impact Caterpillar as well?
You're right. Government spending isn't always a guaranteed win for companies.
Right.
Projects can get delayed or canceled.
Right.
Budgets can be cut.
Yeah,
And political priorities can shift.
that's true.
That's why it's important to look beyond the headlines and understand the details of the proposed infrastructure bill
Right.
and how likely it is to actually be implemented as planned.
Right. So it's not just about assuming that any government spending is good spending.
Right.
It's about understanding the specifics of those projects and how they align with the company's business.
Exactly.
That's a crucial point.
Yeah.
All right, let's wrap up our discussion of these 10 stocks with Pfizer.
Okay.
You mentioned earlier that they have a stable business due to the consistent demand for their products.
That's right.
But what are some of the factors that could disrupt that stability in the years ahead?
One of the biggest challenges for pharmaceutical companies is patent expiration.
Okay.
When patents expire, generic competitors can enter the market,
Yeah.
driving down prices and eroding profits.
Right.
Pfizer has a strong drug development pipeline, but they'll need to continue to innovate to stay ahead of the curve.
So they can't just rest on their laurels.
Right.
They need to keep pushing the boundaries of medical science to maintain their competitive edge.
Exactly.
That makes sense.
Yeah.
Right. We've covered a lot of ground today.
We have.
And I have to say, I'm feeling a lot more informed about these 10 stocks
Good.
and how they might perform in this post-election landscape.
Mm-hmm.
But before we wrap up,
Sure.
is there anything else our listeners should keep in mind
Yeah.
as they digest all this information and make their own investment decisions?
It's essential to remember that these are just starting points for your research.
Right.
Don't base your investment decisions solely on what you've heard here.
Of course not.
Dig deeper. Read company reports, analyze their financials, and most importantly, consider your own investment goals, risk tolerance, and time horizon.
Right. There's no substitute for doing your own due diligence. We've provided some food for thought. But ultimately, the decision of where to invest your money is a personal one.
Absolutely.
It's been a wild ride exploring these 10 stocks
It has.
and how they fit into the post-election landscape. But I'm curious, what about you listening?
Yeah.
What trends or shifts are you seeing that are making you feel optimistic or maybe a little cautious about the future of investing?
It's easy to get caught up in the headlines and the daily market swings.
Yeah.
But taking a step back to consider your own perspective is so important.
Absolutely.
Yeah.
We've talked about how certain sectors might get a boost from government policies,
Right.
but those policies are ultimately shaped by the people we elect.
Exactly. Your voice, your engagement in the political process. It all feeds back into the economic landscape,
Right.
which in turn shapes the world of investing.
It's like a giant feedback loop. And that's what makes this stuff so fascinating. It's not just about numbers and charts.
It's not.
It's about understanding the forces that shape our world and how we can participate in shaping the future.
Couldn't agree more. Whether you're a seasoned investor or just starting out, I think this post-election period is an opportunity to really reflect on your values, your goals, and how you want to align your investments with the kind of world you want to see.
It's like investing with intention. That's a powerful idea. So as we wrap up this deep dive, what's the one key takeaway you'd want our listeners to walk away with?
Don't just chase the hype. Take the time to understand the businesses you're investing in, their long-term prospects, and how they align with your vision for the future. Because ultimately, investing is about more than just making money.
Right.
It's about participating in building the world you want to live in.
Beautifully said. So to everyone listening, remember the future isn't preordained. It's a tapestry woven by countless individual choices and actions, and your investment decisions are a part of that tapestry. Thanks for joining us for this deep dive, and until next time, keep exploring, keep learning, and keep investing in your own informed future.